Hey, how's it going, everyone? This is Dave again with Mad Options, and we have a lot to talk about today because ever since the news unfolded about Meet Kevin over this past weekend, taking the super counterintuitive measure of literally liquidating his entire position in the stock market on Friday, ever since news of that came out, there's been a lot of discussions about whether this guy is actually like as legitimate and trustworthy as he might make himself out to be, right? So is this guy getting canceled, or is this something that he might just be able to brush off and walk away from as if nothing ever happened, right? Because Meet Kevin has been notorious for talking about himself as someone who's extremely transparent when it comes to his finances, and for the most part there is transparency, you can't deny that. But the problem with Meet Kevin is that he has a philosophy that he preaches, and then he goes behind basically everybody's back and acts against it. And why? I mean, we know exactly why that is. It's because he wants to make the most amount of money possible in the shortest amount of period of time, right? So at the end of the day, what he really cares about is making fast money. And we're just going to analyze, in spite of this entire occurrence, first we'll talk about what happened, and then we'll talk about, was this smart? Should he have done this? And what would we have done if we were in this position? So first we'll just give some background, right? So basically this news came out, or a video rather, for Meet Kevin came out on 118, which is about 5 days ago, where he basically talked about Bill Ackman being a complete fraudster, right? Because he did something that was pretty unethical. He basically talked about he was buying puts on the market and was talking about how the market was not in a great spot, and that like he was basically just like saying one thing about the market and how this is the market, things will be better, things are going to be fine in some amount of time, and then he was going behind everybody's back and he was buying puts against the market, right? Which ended up being a great decision because he turned $25 million into $2.7 billion, or something of that magnitude, over the course of literally 3 months. Or actually, it might have been 3 weeks. Basically, some extremely short amount of time, he turned a little bit of money into a lot. And so Meet Kevin was exposing this guy's fraud because, how can you say one thing to the public? How can you say that, that there's no need to worry, that things are going to be okay, etc., to the public, and then go back, behind everybody's back and be buying put options where, you're basically taking a leveraged exposure to the downside to try to make money on the market, right? And so, yeah, this is something that he called out as extremely, extremely fraudulent. And he was saying that, this is a sign that we are approaching a bottom because the hedgies, all the institutions are trying to force us all out of the market, and the market is going to be bullish again within the next whatever. He didn't really give a timeline, but he was basically saying that he's extremely bullish on this market and that he expects everything to recover within a very short period of time, right? And this was posted on 118, so about 5 days ago. Then on Friday, which was literally yesterday, 123, he basically releases this video which says, actually, I sold all of my stocks and crypto, a total sale of about $20 million. That's crazy, guys. $20 million in one day, which is I mean, for a lot of us, that is just unfathomable amounts of money. But also, like, he did it all in one go. He didn't have a weekend to sleep on it and think about it a little bit more. He didn't consult anybody. I mean, he didn't consult his buddies from Millennial Money. He didn't consult, anybody maybe who was a little bit smarter than him in this space. He literally just clicked the sell button, and that includes on all of his high conviction plays like Tesla and some of the others that he claims are high conviction, like Affirm, and there's a lot of these plays that he talked about having extremely high conviction in, and it suddenly now is just completely liquid, even though they are at prices that have not been seen for at least maybe like 12 to 18 months now. right? So this happened literally that the like about what was the difference? 4 days later. Okay, so how can you just flip like that over the course of 4 days? Right? Did he reach some sort of epiphany, or did somebody share some insider information with this guy? Because everyone hears how much he loves Tesla, no matter how much the rest of us might find it as stupid and idiotic for someone to be in love with Tesla and think it has that it should have a forward PE of 90, right? In a very very at a point when the market cap is as high as it is, right? With all of that being said, he sold out all of Tesla. So, anyways, the point of this is that this is major hypocrisy, right? Kevin can call all of us his haters, and that is totally fine, but he deserves to be held accountable to these actions because he is being a hypocrite, and that is just that is the sole truth. There's no way that you can go around this. This is pure hypocrisy, especially when you've constructed your brand and your image around basically being someone who's a hodler, being someone who's always in it for the long term, not the short term gains, right? That's Meet Kevin's brand that he's constructed. But now he's not Meet Kevin. All I care about is making wealth in the long term. He's Meet Kevin. I'm a swing trader. I just want to buy put options against the stock market because I want to double my portfolio faster, because I think that maybe I have some really, really intelligent insights against the market that, that the rest of the others out there don't have, right? Including the Warren Buffetts and the other extremely intelligent investors who actually know what they're doing. So this happened. And then we also saw in the episode of Millennial Money, they did leak the message that he sent to everybody in his community, right? And we won't go through the whole thing, but he did mention that this is a really hard post and that he's turning into a little and selling. And basically he did mention to his, whatever credit you can still give him, he did mention, do not blindly follow me, as this could be very stupid. So he's trying to cover his butt basically by saying that this could be very stupid and I'm breaking my own rules. I mean, I don't even know if you have rules after you do something like this. You can't really say that you have rules, Kevin. I'm sorry. And then he lists a bunch of catalysts, right? And at the end of the day, what Kevin believes from all of this stuff is that the stock market is not going to be accepting of good news or bad news, because no matter what, the market is basically positioned to go down over the next 2 to 3 months. That's what Meet Kevin believes, right? He was saying good earnings will be very little rewarded, bad earnings will be substantially punished. And, I think that a lot of this fear came out because he saw the earnings that came out on Netflix, and he was probably really, really scared about his Tesla position because Netflix dropped by about 25% overnight, right? And so he's worried that, okay, what about all of these companies, right? They might report bad earnings and then they might get shot down 40, 50, 60%, whatever it is, and then he's going to be out, maybe $5 to $10 million, right? Which is a fair fear to have when you have an account that is this big, right? But his principle was, don't be a paper hander, always hodl, and just just think beyond the institutions. Don't be a short-term directional trader. That is something that he preaches but is not following, right? And he deserves to be held accountable to that. So with all of that being said, let's look at his tax situation, because this is actually really interesting, right? And all of these are approximate figures, right? None of these actually have any verifiable links to his account, but we are making complete estimates. So $20 million worth of stock sold. So we're going to say that about $12 million of that was long-term, right? So because, he does have a fair position in Tesla, which was, I think at one point it was at least 40% of his account, right? So we'll give him the benefit of the doubt and say that 12 out of the 20, which is about 60% of his account, was long-term capital gains, right? And obviously all of these could be completely distorted. God knows how much. Maybe he doesn't even have this many gains. So we're taking these numbers with a grain of salt, right? But let's just say like long-term gains, or long-term rather position, right? And for something like Tesla that has, God knows, like 50x or something over the past couple of years, your principal investment on that is extremely low. So all of that is just going to be long-term capital gains, right? Which is, for people with a high net worth, it's going to be about 20%. So just from that alone, he's going to be taking a tax bill of about $2.5 million. Okay, and then the other, let's just say the other $8 million in his account was all short term, right? And of course, right, this is again a super oversimplification of what his tax situation could actually be like, because we know that he's probably dumping a lot of money that he's making from his courses and YouTube. So God knows what his actual net kind of insertion was as compared to what he's exiting. So maybe we can just say that from of actual capital gains, let's just say $4 million was short-term capital gains, right? Because because again, we can't say that he put in all this money, and there's a chance that he might just have made no money off of the short-term trades, because he has been a swing trader to a very large degree. And so from that, let's just say 50%, because that is treated as income. So $4 million of short-term capital gains, which is about, and then take 50% of that. So it's about $2 million, right, that you get from that position as a tax bill. So in total, we're looking at, we estimated $5 to $7 million. This could be anything, guys. Even if this was like 4 to 5, right? It could be 5 to 7, 4 to 5, no matter what it is, right? This is the amount that he's now going to owe to the government. And you're going to have to subtract that from the amount that he sold, right? So how much is he going to have? Obviously, he's not going to actually have to pay the tax bill like tomorrow or anytime soon. But the problem is that he's going to owe that money. So you have to deduct it from the amount that of his proceeds. You have to deduct that because he's going to owe it at the end of the year. And, I'm sure he has some sort of strategic decision around, maybe I can offset these gains by doing some sort of big tax write-offs. Maybe I can buy some investment properties, or I can tax, I don't know. He might have some sort of grand plan to fight off this $4 to $5 million tax bill, but honestly, regardless, even if it's written off, it's still a tax bill that you owe and that you are liable for. And if something else writes it off, then that is still money that you are going to be out, right? So with that being said, the market needs to drop at least 25% for him to believe that this is a smart play, right? Because you have to deduct the $4 to $5 million from his $20 million that he has sold, right? So at that point, that is about 20 to 25% of his account, right? So how much does the market really need to fall for this to be a really smart idea? Does it need to fall 30%, 40%? 50%, right? At this point, what Meet Kevin is basically saying through his actions, because I'm sure that he did this analysis before selling, but he's not really admitting this to the public. It seems like he is trying to predict that there's going to be a very large crash, that this isn't just going to be a slow dip, but that it's actually going to be like a serious market crash, and that things are going to dip an additional 30 to 50% from here for this to be a smart play. I think he's trying to rewind to the beginning of March of 2020 and say, I'm going to get out at maybe only the first 5 or 10% dip, and then I'm going to get back in at the very bottom of March, right? Which nobody really successfully did. Unless you were continuously buying that dip, you were not the one who got in at the very bottom, because that was literally impossible to predict, that the timing of that, because the market was in free fall for about 2 weeks straight. And then of course, the people that were smart were the ones that were buying consistently on their very high conviction plays, which Meet Kevin did when you look at, companies like Tesla that he actually did want to be long-term in. But again, for some reason, now that he's at $20 million, maybe he just threw that out of he probably just threw that investment philosophy away and decided, I need to focus on capital saving. I need to focus on, maybe not so much growing this as much as maintaining. God knows, because this is honestly just It's stupid when you think about it. How is it going to fall? How is the market going to fall 25%? I mean, I think it is fathomable for Tesla to fall 25 to 30%, and maybe he's just going to dump everything right back into Tesla. But still, the timing of this is going to be extremely hard for him or anyone else to predict. So that is something that I just don't understand, right? When you talk about, when you are somebody who talks about paper handing the market being such a bad idea, and that he literally calls people out from the Senate for being paper handers and for doing X, Y, or Z, right? He literally makes fun of Michael Burry because he literally is the it was he took a short position on Tesla and he took a short position on ARK, which actually Meet Kevin also did the same thing. Although he covered that short, so it's actually not really a short position anymore. But with all of that being said, right, Meet Kevin, he's the type of person who keeps saying you got to be smart with investing. You have to be ahead of the institutions, and you got to think for yourself and not focus on the short-term volatility. And then, of course, he himself cannot follow the principles that he pretends to define for his quote unquote course members. So I don't know exactly what this is, but one funny thing, guys, is that he sold on Friday. We don't know exactly where he sold, so maybe it wasn't as bad as maybe he didn't sell at the very bottom. Although I would guess that he probably sold somewhere in the middle, right? Maybe it was somewhere here, somewhere down here. And I just wanted to show you guys that futures are actually bouncing up right now, right? This doesn't mean a whole lot yet because futures can still tick back down tomorrow morning, and Monday could still be another day of blood. But it's just really funny because had he waited till Monday, if he sold out anywhere here, then he's already selling at a worse place than he could have had he waited another day, right? Like, at least dollar cost average out, man. Come on. Why did you have to do it all at once? $20 million. It's just like market sell at $20 million. Like, honestly, he probably caused some of the selling off in like some of the names like Tesla or something like that, because he just had to do a market sell out of panic. But at the end of the day, guys, the lessons to be learned here are that you can't time the market. No matter how smart you think you are, you cannot time the market. You can be a technical analysis chart reader, right? Like, I think that's what Meet Kevin thinks he's doing. He can probably see this basically straight line down and think, oh, it's just gonna bounce a little bit up and then it's probably gonna go down, 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 because he does have puts against the market, right? Puts on the QQQ. And those puts are going to show a loss on Monday if this actually stays and continues to be the case, if it bounces up. But you can't time the market. And two, guys, people like Meet Kevin out there, like, I would say treat everything that they say with a grain of salt. These guys are built for entertainment purposes only, but don't pay them $1,000 just for them to say, hey guys, I'm hodling a firm in Tesla one day, and then the next day saying, I'm completely liquid. I am waiting for the next big dip because I think that inflation is bad, and I think that the market is going to continue to drop for the next 2 months, right? Like don't pay those people money, right? Because at the end of the day, that is just a source of revenue for them to be more confident into making these big rash decisions, right? Because for them, they have like 5 streams of income. They got the YouTube AdSense, they got the course, like they probably have multiple courses, and then they got sponsorships, whatever the case may be. But like, these guys are not the type of people to be giving you financial advice. They're not the type of people to be following for any kind of buy and sell alerts that they do on their long-term holdings. Really don't matter, right? Because at the end of the day, they do fundamental analysis and they do post it on their channels. So you can feel free to look at that and see and decide for yourselves if you agree or disagree, right? Because at the end of the day, the market decides. The market is going to win, and it's going to beat each individual retailer who tries to bet against it, right? And like, if somebody thinks they have an edge by thinking that Tesla is going to have a PE ratio of 90 when it's a $3 to $5 billion company, then that's like, words speak for themselves. That is just insanity, right? And he sold out of Tesla, so clearly he doesn't actually believe that. So this hypocrisy needs to be confronted. Meet Kevin should give an explanation beyond just a YouTube video to people that he follows, because we know for a fact that a lot of people following Meet Kevin have lost a lot of money, right? Because that's just the truth of the matter, right? Because he's selling at a very, very bad time, and he was buying at very bad times too, relative to right now. So at the end of the day, guys, do your own due diligence. If you really don't know what you're doing, just dollar cost average into an index fund. That is the best strategy that beats out every other strategy that people might try to convince you of, unless you found a statistical edge with something unique that you've back tested for years and years and years, then yeah, sure. Then take that approach and run with it. But in the meantime, people like Meet Kevin, they don't deserve your business, right? Because at the end of the day, like, they're not thinking for themselves. Like, look at this tax bill. And look at this. Like, you can't just write yourself off in a message like this. It doesn't work like that. But anyways, hope you guys enjoyed this video. Please give it a thumbs up and subscribe. And yeah, please support our channel. We're just getting started. And here's some more awesome content about options trading from here on out. All right, guys, have a good one. Bye.